We want to be covering RSI today. And RSI, we're going to cover in 3 chapters. Chapter number 1 is going to be, what is RSI? What does that actually mean? How did it all begin and how is it being used in the market? Then 2, how do you set it up? And then 3, how do you actually use it? Okay. And we're going to also, while we're doing each of these things, we're going to break down the myths and all that stuff that go around this indicator as well. Okay, so shall we begin? Okay, we're going to start off with chapter 1, where we're going to go into the whiteboard a little bit. We're going to talk about the RSI. I'm going to show you the definition of RSI, and we'll work our way through it. Now, it's going to be a lot of fun. I get very aggressive at times, so don't mind me when I do that. It's part of the teaching. It's how I do it. I get very in your face about it. So if that bothers you, or that is not your forte, or you're very sensitive, I would suggest not continuing from this moment onwards. So there's my disclaimer. But going forward, I'm going to hold you accountable because you're here to learn about RSI. Let's do it right. Stop fooling around. Let's do it right. All right, let's begin. Let's begin. Okay. All right, let's have a look here. We're going to first start off with the whiteboard. I want to see how much you guys know about RSI. We're going to start with, here we go. I'm going to open up, here we go. Relative Strength Index. Now, what is this and what does this mean? Okay, let's read the definition given by Wikipedia. The Relative Strength Index is a technical indicator used in the analysis of financial markets. It is intended to chart the current and historical strength or weakness of a stock or market based on closing prices of a recent trading period. The indicator should not be confused with relative strength. Now, what did you understand from that? Right? Okay, we don't need to go into that in depth. What it basically means is, when you hear the word RSI, many who enter this industry, they think RSI, it must be an indicator that makes people millions. So what is the indicator setting? I just need that setting because that's the only thing that's stopping me from being a millionaire. No. Okay, we're going to break that myth today. So if you ask me, Naveen, what is your RSI indicator settings? I'm telling you right now, that type of thinking is going to make you fail. So I'm going to watch the chat. If you ask me, Naveen, what is your RSI settings? You need to take a step back and be like, what is RSI first? What does it mean to set a settings first before you can get into putting in the settings and saying, okay, how do I use this information to proceed further? Okay, so far so good? Okay, now we're going to go into this basically. Now, the definition I just read out to you, right? And it's like, I don't know what this brown guy on the internet's talking about. He's talking about RSI, and he read this definition to me. The definition doesn't make any sense. What is it? Okay, let's take a look at it. Let's take a look at it. I'm going to open up the screen again. I'm going to open up the whiteboard. And where is my whiteboard? Here we go. Okay. All right. Let me know when you guys see the whiteboard, and I'm going to put a circle on the whiteboard, and let me know when you see the circle. Okay. The circle will have a smiley face. Okay, good. Good. All right, so now that we see this, I'm going to make sure I draw a little bit on the left so my face or anything else doesn't cover it. Okay, let's begin. Let's begin. Okay. Now, RSI, the words RSI stands for Relative Strength Index. Now, when you think relative, I'm not talking about uncle, auntie, cousin, cha-cha, chachi, whatever words you call it. It's not that relative. It's relative to current time to the past. Okay, current time to the past. Whoops. Okay, that's all it can do. It is not a crystal ball to predict the future. It is just evaluating the past. So, for example, if for a moment, let's say every day you go from your house to your office and you come back, The next day, you go from your house to your office, you come back. The next day, you go from your house to your office, you come back. But then you change it up a little bit. You go from your house to the mall. Okay, you've changed it up a little bit. What it's going to do, it's going to track that behavior and saying, this is different. That's all it's doing. It's measuring the past and telling you, whoa, this is weird. It's not telling you you should buy. It's not telling you you should sell. It's just telling you this is weird. Now, your interpretation of what is weird is what we're going to talk about today. But many people interpret it as oversold means sell, oversold means buy, overbought means sell. Easy. It's if trading were that easy, I would have become a multi-billionaire a long time ago, right? If indicators were the way to success, right? And Mr. Warren Buffett would have saved a lot of his white hair and done this a long time ago. Okay, so keep that in mind. Keep that in mind. Okay. Now, those of you guys who are religious on indicators, like you really take it into your heart, no, this is the only way. I want to ask you, how many millions have you made so far? Nothing, right? Let's continue. Okay, now let's go into the screen here, and I'm going to open it up a little bit, and we're going to go deeper into this topic, okay? I'm going to be very in your face. And I'm going to share it with you because some of you guys actually really want to learn and you're curious about it, because we're going to show it to you how Urban Forex looks at RSI and what does it mean. So let's set it up first. I'm going to go into indicators. I'm going to click on that. And as soon as you click on indicators, you can start typing RSI. Now, this is a platform called TradingView, but you might have MetaTrader. You might be using your broker's platform. RSI is so common, every broker will have it. They're not going to charge you for it, okay? So you just look for the word RSI. If you don't find it, you look for the word Relative Strength Index. You click on it. As soon as you click on it, something on the bottom like this will show up. Now, it doesn't have to be the same color, doesn't have to look exactly the same. But whether you live in Tennessee, Netherlands, Botswana, Florida, Japan, it should be the same, okay? Right now, I just clicked on it. I didn't change any settings. Now, to change the settings, some of the times when you install this indicator, it's going to ask you for the settings. It's going to ask you, what period do you want to set this as? Now, before we get into all that, let me just show you what that looks like. If I click on the settings here, settings, these are the inputs. These are the type of questions they ask you. RSI settings. What's the RSI length? You're like, what does that mean? And what's the correct one to put? You might be asking me, what number should I put? Doesn't matter. I want to teach you what this number means, so that way you can put whatever number you want. So let's talk about this for a second. Now, you remember that story I told you earlier that you go from your house to the office, house to the office, house to the office. One day you go from the house to the mall. Okay. So house to the office, house to the office, house to the office, house to the office, house to the mall. The fifth attempt, you did house to the mall. If I look back these 5 periods, it's going to take in all that information. If I look back 2 periods, it will take in house to the office, house to the mall. A little bit weird. Let me show it to you here. What does that mean? So let's say if I choose the RSI length 5, I chose a random number, 5. I clicked OK. What this adjustment is doing, it's whatever time frame that is selected, whatever time frame is selected from the current candle, it's going to look back 5 candles, and it's going to measure that and give you the relative strength of that. Okay, it's related to the last 5 candles. So the candles could be whatever time frame you choose. So far, so good. Everyone with me? Don't need to overcomplicate it. You don't need to ask me, what is that golden period that settings you put in the RSI? It's not going to be that number that's going to make you a billionaire. So let's remove that logic of thinking. First, understand, what does it mean? You need to understand that. How many period do you need to set? What does it mean? So it is up to you. Now, if I chose 5, in the last 5 candles, has anything happened on this chart? Tell me, all of you guys. I'll make the screen a bit bigger. Okay. And in the last 5, has anything happened? Nothing has happened. And if we look down into the RSI, RSI is just chilling, right? So at the current moment, RSI is not saying anything. But if I change the RSI settings and I make it 50, and I say, look at the last 50 candles, okay, it's going to include all of this. And now suddenly your RSI has lost its mind. It's like, whoa, it's like flying up like a rocket, right? It's flying up like a rocket. So what you set, it will measure that. So the RSI is your assistant. You are not using the RSI to make the trade. It is a tool that assists you. You have to make the decision to tell it what to do, not the other way around. It does not tell you on how to trade. Okay, get that right in your head first. Okay, so never use any indicator to tell you what to do. You need to set the indicator to help you to little bit understand what is happening. That's it. Now, I want to ask all of you guys one thing here. Now, this RSI that's going up for the last 50 period, right? We set it for 50 period and it's going upwards for the last 50 period. If I go like this and I only look at my RSI, I don't want to look at anything else, then it's useful because now I can see, oh, it's measuring, it's going upwards. Or I can just take my eyeballs, move it up a bit, and then I see, oh, it's actually going up. Okay? Now, so far, you know the difference between the indicator and the price. It's telling you what you already see. So what makes RSI so interesting? What makes any indicator so interesting? What is it about an indicator that makes people follow it? The answer is very simple. Low self-esteem, low self-confidence. I need something to tell me what I need to do so I can make some money. That's the problem. We need to improve the education a bit. We got to raise your level of understanding of what are you dealing with in this market so that way you don't have to beg for shortcuts every time. Please give me the best indicator. Please give me the best robot. Please, if someone can just give me a handout, I will make $1 billion. Why? Why would anyone do that? Right? Has anyone done that so far? Why would it happen in the future? Use that logic to understand it's time for you to step it up a bit. It's time for you to increase your knowledge a bit. Are we all okay for that now in this room? For those of you guys who are still here and haven't left because you're feeling offended or sensitive to this, you're okay with that? We're going to raise up our level of education. Yeah? So let's raise it up. We're not here to gamble. We're here to understand how do we make use of this information in this market, particularly with the RSI. Okay, there we go. All right, now, if certain things make sense, use the fire icon in the chat. If certain things you want me to repeat, you can just write the word repeat. If certain things don't make sense to you, just write confused, and I will try to explain it in a different way. Okay? And then if you have any questions, obviously you can type in the full question. All right, here we go. Now, certain things happen into the market where I need you guys to understand how the market movement works. Okay? The very, very basis of the market works on the market dynamics of buyers and sellers. Okay? Buyers and sellers. Okay, I'm going to share with you the logic of buyers and sellers that relates to RSI. Okay? Buyers and sellers. Okay. Now, there's only two parties in the market. Okay? There's someone buying, someone selling. Okay, then you've heard that stuff before. Take a step back. Do you understand what that just meant? Okay, by knowledge, you might have, oh, yeah, buyers and sellers, supply and demand. I get that. knowledge you have, but do you understand what that actually means? So let's take a step back and bring that understanding a little bit more crisp into your mind, which means if someone wants to buy something badly, okay, if someone wants to buy something, someone needs to sell that item. Very simple logic. You want to buy shoes, then there must be someone willing to sell the shoes. It's that simple. Okay? If you want to buy and someone sells it to you, that is the handshake, and that is the job of the broker. You want to buy, he goes, finds you a seller. You guys say, okay, transaction done. Broker says, my little commission, please. You give the broker his commission, and the market is happy. Which means if you want to buy your shoes, it's not the indicator, it's not the charts, it's not the candle, it's none of that stuff. What matters is if you want to buy your shoes and you go to the mall, you don't ask them, what's the trend of the shoes for the last 90 days? What is the setting of the lights in this mall? What is the clothes that the staff is wearing? And are they all ironed or not ironed? According to the newspapers, these shoes should be worth a lot more or a lot less. Wait, what are you doing? What are you doing? You want to buy shoes? You like the shoes? They have the shoes? Handshake, transaction done. That is trading. Now, that transaction is done on price. This piece here. So the single most important piece that you need to understand is this right column. Many people mistake this by saying, since it's so small, I need to focus on the biggest thing, which is my chart. I got to focus on my chart, right? Because my chart is going to give me clues and free information to make a ton of money. It's not. It's not, because you have to understand, what are they trying to say? So let's understand what are they trying to say, and then let's add that to the RSI. And before the end of this webinar, you, my friend, are going to be an RSI expert. Okay? Hopefully. Okay, I'm gonna hold you to it. So let's see. Let's find out. I'll test you at the end. Okay, so you want to buy shoes, you want to, and someone is selling shoes. Transaction done. Okay, good. Now you want to buy a ton of them. You just found out that Nike shoes, one of the factories, is going to close down in China. You heard that after the Chinese factory closes down, the factory in Japan is closing down. The factory in Vietnam is closing down. What does that mean? What's going to happen to your Nike shoes? And you want a certain type of shoes. You're assuming they're going to be low in quantity. So you want to buy a lot, right? Because you're thinking it's going to be worth a lot. So you want to buy 10,000 pieces. You want to buy 10,000 pieces. You go to the mall and the mall says, you got to stand in line, buddy. I only got 500. The handshake is not happening. You want 10,000 shoes. They got 500. There's no handshake. The broker is trying its best to find you more of these shoes. They're trying to find it. They can't find it. So what are you going to do? They're like, you have to stand in line because all these people want these shoes. You're going to say, F those people. What's the price right now? 5,755 is the price. You know what? I'll give you this price. Give it to me. No, I can't do that, sir. I'll give you this price. Give it to me. I'll give you this price. Give it to me. There's a bigger hotshot that comes and says, I will give you much higher price than what this guy is offering. Give it to me. The speed at which it goes up, tells you how desperate people are to buy this. Pop quiz, immediately. Type it in the chat. What's the most important thing of how it goes up? What did I just say? The speed it goes up is what's important. That tells you the quality of the demand. If someone if this is the current price, 100, and someone says, I'm going to offer you 101, and the next guy says, 101 and 50 cents. Do you think the demand for this product is hot? Do you think people are going to kill each other for this product? They're not. It's not a big deal. But if it goes from 100 to 200 in a very small, short period of time, you know the public has gone crazy. They've lost their minds. There's a lot of people out there willing to buy this no matter what happens. That's your opportunity. That's where you come in and you're saying, interesting. Interesting. How can I get my hands on some of these things so I can sell it to all those crazy people who want it? Because they will pay you a premium for it. Okay? So which means, can I get my hands on it for $105 and sell it for $107? Like, okay, Naveen, in theory, that makes sense. That's what we're always trying to do to make money. But how do I know it will go from 105 to 107? Do any of you guys have this conversation going into your mind? That obviously, Naveen, if you want, the goal is to buy low, sell high. Obviously, I get that. But do you know if it's going to go higher? If you don't know it's going to go higher, then what does low even mean? It doesn't mean anything. Right? If gold right now is whatever the price it is, and it's supposed to be at 300,000, then it is low. If the current price of gold is 10,000 and it's supposed to be 9,000 at the highest point, then it's super high. Right? So the question comes in your mind is, how do I know? So what's the answer, guys? What's the most important thing you need to monitor? What's the answer to that? Speed. How quickly does it burst out of a normal price makes it important. Now, myth number one, I'm going to break for you guys on RSI. Ready? In RSI, let's just put this at the standard settings of 14. Here we go. 14. RSI is telling you things are overbought. Right? Things are overbought. They're above this dotted line. Above that dotted line, people claim it as overbought. Now, judging by the speed, how this thing went up here, can you tell me, has the market lost his mind or people don't really care about this product? Can you tell me that? Have they lost their mind or no? Is there demand in this product? Whatever this product is there demand for it? Okay. Yeah, there's demand for it. So if you go looking at this and saying, ooh, overbought, I need to sell this thing, you're going against logic. The indicator's telling you sell, but the market is telling you they want to buy more. They can't get their hands on enough of this. Any little dip that comes in, they buy it. Any little dip that comes, they buy it. They're desperate. That means they were willing to pay this price on average. This is the price they were willing to pay. Then someone came into the market, they shot up the speed, and they're willing to pay this price. And you're sitting there like, Mamma mia, holy moly, they're buying this aggressively. That means they want to buy more. If any discount comes in, they're going to buy more. That's what it means. But if you look down in your RSI, it says overbought. The standard terminology taught in the market about RSI being overbought is you should sell it. You want to sell it? What did you just learn about the logic? You want to sell that when the indicator says overbought? So I need you guys to understand that there are times when the indicator will be perfectly right, and there are times when the indicator will be blatantly wrong. Because it's an indicator. It can only tell you the past. It can only tell you the past. You don't trade on the past. You're trading on what it can do, right? So if that whole thing, if you understand what I just said, then the relative strength has some meaning, but not enough for you to say, ooh, overbought, I should hit the sell. Why should you hit the sell, my friend? Why? Okay. Oversold, I should hit the buy. Why, my friend? Why? So if there's one thing you want to take away from this webinar, let's take a look at a different area where it's a little bit oversold. This area is oversold here, right? It's below that dotted line on the bottom. It's a little bit oversold. So the markets have been going down, right? And now it's coming to oversold. Take a step back, and instead of looking at just this on its own, if you just avoid looking at that on its own and you look at the context, tell me the speed that the store was giving discounts for this Nike shoes. Tell me the speed that they were giving the discounts. Has the speed went faster? Okay. It went faster here, right? That's the moment where it's like this, it was going up, then it was going down, then it was going up, then it's going down. What you're looking for is not higher high, higher low, lower low, lower high. None of that structure BS stuff that's been taught around. What you're looking for is what happened when it was trading at this price. What happened? What happened to that price? 2 hours later, bro, it's still at that price. 3 hours later, bro, it's still at that price. I don't need to look at a chart to say people are happy with this price. That's interesting. People might look at a chart and say, oh, that's a range. You need to range trade. No, stop. Stop. What happened to that price? People are still trading at that price. Good. I don't need to look at a chart. What happened to that price? That price dropped. How much? That price dropped 10%. How quickly? Within 10 minutes. Whoa. What price? What happened to the price now? It dropped further. How much? 20% more. Whoa. What is happening? They're getting rid of this thing. What is happening? Now I bring my face to the charts. Now I look at the charts because I can feel the rhythm of the price that's moving. I don't need to look at the chart to validate the logical information that's coming out of the market. The chart is a visual representation of what happened. The problem is we look at a chart and we get so detailed in trying to solve the chart that we forget what game are we actually playing. What game are we actually? We're playing a trading game, not a chart game. We're not playing an indicator game. We have to trade. So we need to understand what is happening. Okay. So far, so good. Everyone with me? Okay. Remember, fire for I'm with you. I got it. Confusion for can you explain in a different way, and repeat for you need that example one more time. Yeah. Remember, this logic, whether you're in Nebraska, Tennessee, Illinois, Alabama, New York, or you're out in Japan, this is the same everywhere. If you turn off your monitor, this is the same in the real world as well. You know this stuff. Only difference is you need a brown guy to tell you. What's that saying? The famous saying about brown people in finance? You know, once you go brown, the math adds up. I think that's a saying. Let's say that's the saying, okay? Okay. So now, all right. I'm trying to simplify this as much as I can so that way it goes in, right? It goes in because it can get hard. There's so much information coming at you. I don't blame you. It can get confusing. I was lucky enough to start when there was not too much information. It's a double-edged sword. Back in my day, there was less information, but there was bad information. There wasn't good information. In today's world, there's good information out there, but there's so much garbage that's surrounding it that it's like, how do I know if my information is good or not? So I get that, right? So now, all this information that I'm sharing with you, I need you to look at the markets whenever you're done with the webinars or whenever you're done watching the recording again and again. Go test it out. Don't just take my word for it. You gotta have to stop doing that. Stop taking people's word for things. Go test it out. That is the only way to move forward. Go test it out. Yeah? Okay. All right. Now, so if I tell you the RSI settings, you need to set it at 30. That's the golden number. What are you going to say to me? Be nice. What are you going to say to me if I tell you that's the number you need to do and that's how you become rich? Okay. What will you say to me if I ever say that to you? RSI, you got to use RSI setting number 14. You're like, it's not working. I'm not making any money. The RSI setting number 17 is the golden number. Baloney. There you go. Okay, good. All right. So far, so good? Good. So don't let anybody, including myself, ever tell you that there is a special golden thing that's going to make you rich for not doing anything. You got to do something. It's not that difficult, right? Everything I've told you so far, it's not that difficult. So let's take a step back again. And I'm going to show you here. Remember that oversold part. Let's get back to the charts now. Okay, remember that oversold part, this part right here. What did they tell you just here? Let's talk about the phase one. Here's phase one before it became oversold. Tell me the speed. How was the speed? Was it fast or was it slow? Okay, now the speed, notice what my eye is looking for. I'm going to train you right now. What my eye is looking for is, I see this is the lowest point. New lowest point. There's a new low, but I'm also interested in how long did that take? Why is it taking so long? That means people were happy with that price, so they accepted it. That's okay. Then it goes new low. That's a lot faster this time. Why was it so quick? Why are they dumping this thing now? It goes in my head of like, it took 10 days for it to go down, and now it took 2 days to go down. Huh. That sounds like desperation to me. That's called relative. I'm measuring it to relative to what I saw earlier. That's relativity, okay? It's the same thing the RSI is doing. It's using that relative information to try to tell you what they're observing. The indicator is doing that. You can use the indicator. You can look up at the charts as well. They're both will try to tell you the same thing. Now, in the next part, when you see where this arrow is, what's it telling you now about the speed after it goes new low? What's it telling you about the speed? The time seems to be similar, the amount of time, but what's it telling you about the speed? It's telling you it's fast, right? It's super fast. So if the speed is fast, that means the store, just take it simple. Don't think sellers and buyers. Think the store who has to sell the merchandise is dumping it. They're getting rid of it. Now, if they're getting rid of it, there's no need to buy. Let's see how much they get rid of it. Then, new low. How much new low? It was fast, but compare it to relatively to before. Compare it to that. Is it much faster than that? Speed is the same, isn't it? How big is it? They only dumped it a little bit. They dumped it 2% compared to 15% last time. That's interesting. Now, these are the early warning signs of oversold. Now it makes sense a little bit. Now the RSI is actually going to be helpful. And this is the time when people say, I bought when it was oversold, I made money. They got lucky because now the RSI matches with the logic. It matches. But there are times, like I just showed you, it will not match with the logic and the RSI will be wrong. And the guy or girl will be scratching their head saying, sometimes I make a lot of money with RSI and sometimes it just eats all my money. There's something wrong with this indicator. Maybe I put the wrong number. That's how they start thinking. Now you tell me, apart based on everything you learned so far, is it the number of the RSI? Is it the number of the RSI that's holding you back from becoming your true potential? Is it you put the wrong period? Is that what it is? No, absolutely not. Making sense so far? Is it clicking? Is the information going in? So the RSI can be a good tool to tell you, hey, buddy, it's oversold. Have a look at the charts, analyze it. Then you can say, oh, yeah, looks like it is oversold. Okay, on the current market, hey, buddy, it looks overbought. Analyze the market. When I look at the market, oh, my goodness, mamma mia. I'm not selling that thing. I'm not selling that thing. Okay. Now, some of you guys asked about what about divergence? This hand in hand with the logic that I just showed you, the divergence will start showing up. The divergence will start showing up. And then the divergence folks will start saying, you see, divergence is the golden key. Is it? Is it MACD? Is it RSI? Is it Fibonacci? Is it Fibonacci? Is it a dinosaur pattern, bat pattern, cat pattern? What is it? At the end of the day, what market are you trading and how does that market move? You just got to understand that. It's not that difficult. We're making it difficult because we're swimming in a sea of information of nonsense. You know what I mean? So this is the example I always like to give, and it makes people understand very quickly. You are a very rich person, right? Okay, and there's a bunch of us looking at you and saying, we will bet based on what you will do. Okay, so you went to the Rolls-Royce dealership to buy a car. You go to the dealership and the dealership says, this is the car is worth $1 million. You're like, okay, I'm interested in it. You pick your colors and everything. But then you, for some odd reason, you got a phone call. You're like, I'll be back later. I'm not going to buy today. And you leave. Now there's a million people standing outside the Rolls-Royce dealership looking at you because they're trying to track your movements. And they're saying, this person didn't buy today because the moon was here. The Jupiter was here. The socks was yellow. The shoelace was untied. He has lint on his shoulders. These are all correct observations, but they are incorrect observations for the decision of why the person didn't buy. Do you understand the logic? Many people can make any kind of analysis. It doesn't mean it should be done. You can make an analysis on anything, right? It doesn't mean that's the right way. So, as you're learning, you're coming into the world of trading, we're swimming in a sea of nonsense of information because making a YouTube video, anyone can do. There's no license required to make a YouTube video. So anybody's just making a video. They're just trying to repeat what they see the algorithm likes. And then the blind leads the blind. Unfortunately, that's how the market is. But that's good because when you do land upon the right information, you know whose money you're going to take on the other side. Okay, not in a bad way. It's knowledge versus misinformation. It's the battle of that. So far, so good. Make sense? Okay. Thick candle means good demand, Naveen. Josephine, I didn't understand what you meant by thick candle because my candles are all the same thickness. Okay, they're all the same thickness. Do you mean a large size, like a long one? But yes, if you mean the long one, then yes, a long candle. Now, when you say long candle, if I just show you this, if I just show you this candle right here. Is that long or is that small or is that normal? Can you tell me? We don't know because there's nothing to compare it to. That's where relative comes in handy. Is according to the norm. Now that I see the norm, that's a big candle. That's a big candle. But if I don't have that context, I don't know. I have very limited information. Does that make sense? Is everyone with me so far? Is that making sense? Is the information going in? If everything I've told you so far, if it's making sense and it's registering with you, then let's go deeper. Let's go deeper. Let's take a look at some more examples. Better yet, you want me to show you? No, maybe not today. But I did a trade 2 weeks ago that netted around $430,000 or $440,000. It was probably one of my biggest trades, even though I made a lot of fuss few months ago about doing a trade that was $130,000 and $300 and something thousand dollars. But I did a $430,000 trade a couple of weeks ago. And a lot of it has to do with understanding this logic. Okay, a lot of it has to do with understanding this logic. There is no secret system out there. Many people ask me how do I do my P&L and this and that? Like I do some big numbers, but it's nothing different than what I'm telling you right now. It's exactly this. I just take a moment and reel it all in, and then I make a trade. And when I am convinced that this is going to be a buy, then I load up heavily because I believe in the trade. You're not going to load up on anything based on an indicator that goes up. What are you going to do? Put one standard lot? Okay. Now try 1,000. Okay. If you're going to do numbers like mine, try to do 1,000 on just that information. You're going to feel scared, right? Like, what if it doesn't work? So how do you get that conviction that this is going to be a buy? This is going to be a sell. You got to read the behavior. And the behavior is basically the context that you pick up from the market of what's actually happening. What are they trying to tell me? Okay. So far, so good. So far, so good. Okay. Now let's open up some of these charts here. Okay. Ready? Let's open up some of the yens. Yens are hot. How many of you guys here are interested in gold, for example? Because right now everybody's eye is on gold, right? Because gold is in the news, so everybody's saying gold, 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 gold. I'm gonna show you gold. Okay, XAUUSD. Here we go. Let's go to gold. All right, here we are in gold. Okay, now for those of you guys who are strictly Forex people or strictly stock people, don't worry about the word gold. Just do this. Just do this. What you need to be concerned about is, how do I understand intent based on what I see? You can use the RSI as well. Now, let's use your example, what you learned today, and see this. The RSI, everyone, is now oversold. Shall we buy it? Shall we buy it? Okay. The RSI is oversold. Shall we buy it? No, absolutely not. Why? Why should we not buy it? All of you guys who are saying no, that's correct, but why should we not buy it? Okay. It's fast. They're dumping it. Why do you want to buy if they're dumping it? It's illogical. It's illogical. So, okay. Now, let's take a look at this. I'm going to take you guys up to a monthly chart, okay? To a monthly chart. Now, again, don't look at the monthly chart as, oh my God, that's such a big number. Don't even look at that. Don't even look at this. Okay? I'm cutting out all this stuff for you. I want you to look at it for what it is and what it's trying to tell you. Okay? So, for a period of time, prices were prices were accepted. I got it out finally. Prices are accepted at $1,800. Okay? So gold was on average accepted at $1,800, up and down a couple $100. Everyone agree with that? You guys can see that with your bare eyes, right? From this moment to this moment. Now, I know that's years, but just take it as the word moment. From this moment to this moment, whether it's hours or it's days or it's years, it's the same logic. From that moment, it was trading at a certain price. Now, prices first, before that, if you take the context in mind, it went da-da-da-da-da-da-da, stop. Happy, 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 happy. Happy at 800. Satisfied. Satiated. Fantastic. 1800, we buy jewelry. Everybody's happy. Okay? Mr. T is happy, Okay. So everyone's happy at 1800 because people who are selling said, okay. People buying said, okay, no problem. 1800. And then prices gave a discount. Can you tell me how the discount was? Was it fast or was it slow? How was that discount that was coming in that went from, I don't know, 1900 all the way down to 1600? Was it fast or was it slow? Okay, a lot of you guys are saying slow and the word choppy. The answer is correct. Why did you use that word? Relative. You looked on the side and based on everything else, you're like, that's pretty slow. Good. Your eyes need to see compared to everything else. That looks pretty slow. The candles are tiny. So they're slow. Now tell me that same logic when the market goes from 1600 back to 1900. Tell me the speed. Tell me the speed. Is it fast or is it slow? It's fast. Because now you are comparing it to the slowness that you just saw. And you're like, wow, that recovered fast. But they're in the vicinity, right? They're in the area of I'm happy around 1800 price. Now, if you get really nit-gritty picking and saying, what do I trade today? What do I trade today? How do I make money today? You're going to get lost in all that. Then what happened to the discount? Tell me, all of you guys, from 1900, how much discount was given? 1800? How long did that take to give that discount? 1, 2, 3, 4, 5 candles, right? 5 candles to give a discount. In this particular case, 5 months, right? Whatever the period is, it took that long to give that discount. Okay, from 1800 and it recovered back to 1900. Tell me how fast did it recover? How fast did it recover? 2 candles. It ate the whole thing up like it didn't matter. That's demand. I move my head back from the screen so my eyeballs don't burst, and I see, interesting. Happy, 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 happy. Discount, whoop. Interesting. Discount again, whoop. This is where the word higher low comes in. Higher low comes from they're willing to pay more. Higher low is not a textbook thing that you have to study. Higher low means they just now said they're willing to pay the higher price. Aha! That's good news. That's what higher low means. It's not higher low, lower high, lower low. That means downtrend. That means uptrend. Stop. You're not trying to make a PhD out of yourself. You got to make money. Okay, you're not here to show how much knowledge you have. It doesn't matter. Do you understand is what matters, not how much do you know. Okay? Now that has gone up to 18 and back to 1900, tell me the discounts now. Tell me the discounts now. Fast or slow? It's not even coming down at all. It's slowing down and people are becoming happy at this price of 2,000 and no more discounts are coming in. What happens next? It pops. Now that it pops, does that mean the demand is high in the market right now, or is there no demand? Tell me, is the demand high or is the demand low based on what you just saw? The demand is high. Now, wait a minute. Wait just a minute. It's in the news today, right? 1, 2, 3, 4, 5, 6 candles prior, which means six months ago. You know this information before anybody else does, and the world is screaming today. Oh, all-time highs, all-time highs. And now the world is jumping onto gold now. High demand. You already knew the information ahead of time. Now, wait. Take your eyeballs down. It's overbought. Should you sell it? Should you sell it? Are you effing kidding me? Never sell that thing. It just took so much time to blast, and you want to sell it because an indicator told you it's overbought? The indicator is just telling you what it sees. That's all. It's not telling you to sell. And that's the biggest myth that comes around the RSI. It's a lack of understanding, because sometimes it's actually right. It's actually right because the price action is right. It matches. But in this context, it doesn't match. Make sense? Is it going in? Is it registering? Was that too hard the way we did it? Okay. It'll get easier the more you practice it this way. It'll start getting easier and easier and easier. Will it happen overnight? Absolutely not. But it's the right way to do it. If you want a career in this market, if you want to work from home, do whatever you want in life, I get all that. I get that. Then at least do it the right way. Okay? Instead of saying, please, what is the golden indicator? Please, what is the settings of the indicator? Please, you got to stop this begging and you got to say, I got this myself. I don't need to beg. I don't need support. I can do this. You got to step up your knowledge. You got to build that self-confidence, and you got to say, this thing's going to buy. I got to load up. That's how trading is done. So far, so good. Now, it took 54 minutes to explain all this to you guys. Would you now say you now understand RSI better? Would you now say you understand RSI better? Yeah? Good. Good. All right, let's take a look at this on, one of you guys said, please repeat same analysis on lower time frame. Sure, let's have a look at this. Let's go down to, let's say, a daily. Okay, we dropped it down a little bit, okay? Now, same context. It reached up to this high, and then at $2,300, happy on average, right? Shoots up, starts to make new highs here. Discount given. How is the discount? And how long does that discount take? So imagine as if you're listening to a radio and you cannot see the screen, and someone's telling you the price is 10, the price is 10, the price is 10, the price is 10, the price is 9, the price is 9, the price is 5. Your eyebrows are gonna go up and like, 5? Whoa, that was quick. From 10 to 9, it was slow, but 9 to 5, wow. That's how you got to look at the markets. You got to look at it in terms of speed and how long. These things are very vital to understand the demand of the market, because our job is to supply that demand. That's how we make our money. Someone has to pay us, because we don't want the gold. We want the difference of where we bought it and where we sold it. That's all we're interested in. We're not going to take that gold and put it in the locker and saying, precious, we have gold in the locker. We don't care. We want the difference, right? That difference is where we make our money. And that's how you understand that when we're doing all this stuff, you want to position yourselves for that. Now, this discount that was coming in, it was pretty fast. Then it slowed down. It's fast, but it's less in amount. How's the recovery? Wow. Boom. Short time, really fast recovery. Ooh, they want this thing. Again, they do a discount. Slow. Okay, 4 or 5 candles. Recovery, 3 candles. Boom. How's the discount now? They're not giving discounts anymore. 3 candles, doesn't go anywhere. No discounts. Boom. Can you figure it out now? Can you position yourselves based on, I see what they're doing, I see what they're doing, I see what they're doing, instead of, you see this line, when the price comes to that line, I will buy because that's a 50% Fibonacci, this is a trend line break, this break, that break, Jupiter is here, the moon is here, my hand is like this, my hand is like that, I'm itchy here. What is this? Understand what you're doing. Don't play all these other games. Does that make sense? Okay, so the more you look at it like this, the more these tools, they're not bad. They can help you. They can tell you, hey, buddy, things are overbought. Go have a look. So when you come to look, you're like, oh, I'm not selling that. I don't care if it's overbought. I'm not selling that, but thanks for pointing it out. Perfect. Perfect. You move in deeper and deeper from there, and that's how you build your career. Now, oversold can help you in this context. In an uptrend, oversold's like, this is fast, and then this is very fast. It's oversold, but I cannot buy it right now because it's so fast. Hold on, Charlie. Hold on. Recovery. Wow, recovery slow. Bam. Oh, I don't like that. I don't like that. Recovery slow. Slow, slow, slow. Boom. Interesting. Now, during this process, it takes you time to figure it out, right? It takes you time to figure it out. Listen to me very carefully when I say these words. When you figure it out and you do a buy, the money you will make from here to here is going to be the best money you're going to make in your life than someone who tries to guess and says, look, I picked the bottom. You bring that guy to me, I will slap him and her all day long. You bring that guy to me, I will beat him for you. That is for Instagram and YouTube. I picked the bottom. Imagine how much money that means for you. You don't listen to that voice. You listen to the voice that says, I know they're going to buy. I'm going to load up so much. I'm going to make so much money that this guy who looks pretty on Instagram is going to cry once he turns off the recording. Cry, tears of blood, just by seeing how much money you made. Okay? Tears of blood, he will cry. Or she will cry. Does that make sense? I know it's a rough example, but whatever it gets it in, the whole point of this whole thing is it's got to go in. You got to understand. You got to understand. And don't take my word for it. Use it in your charts. Understand it. Practice it on demo. And then you'll start to realize, hey, once you go brown, the math adds up. Thank you, everyone, for coming to this webinar. It was great fun. I hope you guys learned something today. As always, I don't like wasting anyone's time because I don't like my time wasted. So I hope every time that you come to these webinars, you learn something. Those of you guys who are Urban Forex members, thank you so much for your support. We will continue to make sure your education keeps growing. You have the latest information in terms of how to grow quickly and fast because we like to cut out the fluff and get you the information straight. So to take you from point A to point B in the quickest way possible, but in the right way. So thank you so much for attending. Until next time, bye for now.